Once the high performer in the local bourse, the debt-ridden conglomerate Boustead Holding recent financial result reveals a gloomier outlook to the company's future. According to the financial report announced by Boustead, the company registered a loss after tax of 66.1 million ringgit. That will be the fourth consecutive loss for the company. At the same time, the company also records the lowest revenue in the recent year, making only around 66% when compared to the revenue of the first quarter of 2020. What's more worrisome is the current ratio of the company. According to the Q2 financial result published by the company, its current liabilities stood at RM 7.3 billion. Out of the 7.3 billion ringgit, 4.3 billion came from borrowing, while 2.7 billion classified as payables. However, its current asset only value at 3.8 billion ringgit, making the current ratio stood at only around 0.5. Looking closer into the current assets, cash equivalent asset had reduced from 941 million to 623 million in a year, while the asset held for sales increased to 183.5 million from 92.9 million. With widening loss, the company can only rely on monetizing its non-current assets to meet its obligation. On March 2019, Boustead had sold its Royal Chulan Bukit Bintang Hotel for RM 197 million and its 2.93 acres land in Jalan Kotrain for RM 138 million. There are a sum of 432 million worth of asset sale in the near future. Despite that, it is still not able to meet the current liabilities. Although the financial health of Boustead is declining, the market did not react vigorously to the announcement. Boustead is no stranger to current ratios at below 1.0. Referring to the 5 years financial report, the company current ratio stood at around 0.6 from 2018 to 2015, but it had dipped into the 0.5 level since 2019. Looking at the share price, it was maintained at the level of above 75 cents per share prior to the movement control order. Like most shares listed in Bursa, the share had once dropped to an all-time low of 34 cents during March. Currently, the share price of the company remained at 60 cents per share level after the announcement. Part of the support for the share comes from the news that LTAT is going to privatize Boustead. In fact, it is one of the top issues around the loss-making conglomerate recently. On 27th August, LTAT confirmed that it had received a nod from Bank Negara for the privatization plan, but did not formally make any announcement yet. According to Boustead, the indicative price for the takeover is at 80 cents per share. Using 65 cents per share as reference, it meant a 20% premium to the price. However, as referred to the announcement on May 28, LTAT had stated that there can be no certainty that it will proceed with the proposal. LTAT is already the single largest shareholder of the company by holding around 59.4% of Boustead share. Besides that, LTAT also holding the 4 companies that hold by Boustead. LTAT is not without its own problem. The Provision Fund for the Military had not published their financial report for 2 years. The reason of not publishing annual report was due to the financial discrepancy of the financial statement for the pension fund. According to the company's auditor, Messrs. Ernst & Young, there are 7 findings determined as a result of mismanagement, including overstating LTAT asset from 2015 to 2017. In 2019, LTAT was accused of overstating its net profit by 44% in 2017, following non-compliance of 2 previous transactions with financial reporting standards. As a result, LTAT announced its lowest ever dividend of 2% in 2018. Although the dividend declared for 2019 increased slightly to 2.5%, it's still a stark contrast to the above 12% declared for the years before. Back to Boustead. Other than disappointing financial result, the company is also having a lawsuit against its previous directors for mismanagement. In June, Boustead filed a suit against its former chairman Tan Sri Muhammad Ghazali Chipmat, former managing director, and its 4 executive directors. To turn around the company, Boustead is dropping its plan in acquiring a palm oil plantation in Sabah. Market also has it that Boustead is going to sell its cruise terminal to Westport and Northport. With COVID-19 threatening the global economy development, the recovery path for Boustead is expected to be tough. Selling asset might be a viable solution to the need of cash, but the true challenge to the company is to make Boustead profitable again.